very good afternoon to all of you. I hope you and your family have taken the second COVID shots and are all safe and sound. I take the pleasure of welcoming all of you for the Q1 FY2022 earnings conference call. And I also hope you have had a chance to look at the financial statements and earnings presentation that was uploaded on the exchanges and our website. So at the outset, I'm quite happy to share that the top line grew by around 37.6%. The EBITDA moved up by 6.7% and net profit by 7.8%. And I would like to share that this is indeed a very good performance in light of the fact that in our raw materials, ammonia shot up by 102%, phosphoric acid jumped up by 49%, our RGP propylene that shot up by 50%. And despite such huge hikes, it's thanks to better capacity utilization, cost optimization, product differentiation that we have been working at, that we could enhance, the margins and improve the fixed, goods pricing to pass on a good chunk of these, I would say, price hikes. Typically, the finished good pricing reflects the higher costs normally over 1 or 2 quarters. And so we see that positivity play out in the following quarters also. Now, the industrial chemicals grew by, 12%. And the broad, I would say, shift that is happening of specialty chemicals from China to India continues to provide a good boost to our acid business. Though in the acid side, in our Dahej facility, we preponed our scheduled shutdown maintenance because we found a good pocket. And so that while this quarter had an 18 days planned shutdown, in the next few quarters, we will be seeing the advantage emerging. As far as IPA goes, there was a certain impact emerging out of, the COVID-related disruptions. But fundamentally, we see that, for the pharmaceutical sector, IPA demand and requirement will continue to grow as the pharma sector grows. In the second zone of our businesses, as far as mining chemicals goes, we recorded a growth of 54%. And LDAN, which is our top grade premium product, also has improved. But we are seeing that, the cement and infrastructure sector is yet to kind of recover back to the pre-COVID days. But it's a matter of, I think, a little time. And we are seeing that, possibly the second half of the year, post the monsoons, will be something where we will see a positive traction. Monsoons, in any case, it's a little low season for the mining sector. As far as the crop nutrition business goes, here we are seeing indeed another very good quarterly performance. And the segment grew by 66.6%. And of course, this is the 7th consecutive quarter of profitability, that we had gone through a tough patch. And with the highest ever, our nitrophosphate and our NPK production. And despite, all these lockdowns because of COVID, we could manage over 4,000 digital webinars and reaching out to over 60,000 farmers with our product value proposition. And more, we are now feeling confident as we see the resonance from the marketplace that our conviction in our differentiated product strategy and the way we have put in various other strategies, go-to-market strategies, that this is indeed something that is playing out. And it will be something on a sustained basis that we will see good results. As far as our overall capex plan goes, the ammonia plant that we had planned and the TAN plant in the East Coast, both are, all in good control, running as per schedule. And both these additions, once implemented, is going to solidify the strong foundations of the company and help sustain and enhance our leadership that has been built over 40 years. So now from a larger perspective, I might share that the four-pronged strategies that we have put in place are something that we are working hard at, and we are seeing very, very positive traction. One is to get our size right. And now with our fertilizer expansion already done behind us and doing very good, acid, that we had enhanced our, capacities. There we are seeing it, turn very positive. And similarly, it will be 10. And all of these beautifully aligned with the India growth story. So getting our size right was the first strategy that, we had planned. And that is something that is bearing fruits. The second is that we have invested a lot of energies into building a strong backbone of best-in-class systems and processes based on digital and IT prowess. And that is giving us a strong grip on cost optimization as well as, the grip on the marketplace. So that's the second, I would say, strong strategic drive that we had brought in. The third that we have been working on is this backward integration, which will ensure that, we bring more value into the whole chain, which is something that we have taken up in terms of the ammonia facility. And that is going to be, again, something that will help enhance the leadership that we have in the downstream over the last 40 years. And lastly, and the most important one, is the shift from commodity to specialty that we have started, or from just products to holistic solutions to the final end consumers. And so that in all the three businesses that we are into, industrial chemicals, mining chemicals, and the crop nutrition business, all the three, this drive to move from customer to consumer and providing them holistic solutions, that we are seeing a very strong, very positive traction, and that promises to unfold an exciting future. So on that note, I would like to hand over to Mr. Amitabh Bhargava, our President and CFO, for a more detailed explanation on the performance of the quarter. Amitabh?
Yeah, thank you, Mr. Mehta. Good afternoon, ladies and gentlemen, and thank you for joining the Deepak Fertilizer and Petrochemicals conference call to discuss Q1 FY2022 results. Our performance during the quarter, as Mr. Mehta was explaining, remained strong despite pandemic-related challenges and significant adverse movement of input prices. This was supported by differentiated product value proposition, operational efficiencies, increased capacity utilization, and proactive marketing strategies. So during Q1 FY22, we reported a total operating revenue of rupees 1,902 crores, an increase of 37.6% compared to last year. Our operating EBITDA stood at rupees 290 crores, an increase of about 7% YOY. Our net profit for the year recorded a growth of over 7.8% to rupees 131 crores with margins of 6.8%. There's been sharp increase in key raw material prices YOY and even sequentially quarter on quarter. But YOY, if you see, ammonia prices have gone up 102%, phosphoric acid prices up 49%, propylene, that is RGP, 50%, and MOP up 7%. In the short term, these higher raw material prices have created a headwind that we expect to stabilize over the next few quarters. Now here, government has also been taking proactive initiatives to support fertilizer manufacturers and farmers, for example, increasing BS subsidy and allocating additional budget. Overall, our net debt, we further reduced it by approximately another 240 crores during the quarter. Finance costs reduced by 22% YOY, driven by continuous reduction of short-term debt due to better working capital management, and our focus on liquidation of products in the fertilizer business from retailer shelves supported working capital efficiencies during the quarter. Manufactured mining chemical business recorded a revenue of 389 crores compared to rupees 253 crores same period last year. TAN volume grew by 11% YOY and reduced 12% sequentially quarter on quarter. TAN demand was subdued as the second wave of COVID affected demand from coal, from cement and infrastructure sector. During the quarter, our manufactured industrial chemicals business recorded a revenue of 318 crores compared to 283 crores same period last year. The revenue grew despite having a high base on account of increased IPA realization last year, which was an aberration. The growth was supported by 34% increase in nitric acid volumes. IPA sales volumes declined by 11.2% YOY. Due to the first COVID impact, as you know, IPA prices in the Q1 FY21 saw an unprecedented spike. And as expected, the current quarter has seen an overall softening of IPA prices. Now, nationwide pandemic-related restrictions affected the industry operations and thereby demand of nitric acid products, particularly for the spot market customers. Our Dahej facility also, as Mr. Mehta was explaining earlier, we advanced the scheduled maintenance shutdown for a period of 18 days, which resulted in lower volumes in Q1. Our crop nutrition business segment continued its growth momentum, and in terms of volume, it delivered 25% increase in bulk volumes YOY. Differentiated NPK, that is a smart tech, their volumes went up 39% YOY to 1.31 lakh tons, backed by, again, continued market development activities to create demand from the farmers. Overall, Q1 FY22 CNB revenues increased by 66.6% to rupees 993 crores. During the quarter, our IPA plant operated at a capacity utilization of 93%, and both acids and TAN operated at 86% and 103% respectively. In the crop nutrition segment, NP and PK plants operated with utilization levels of 92%, and the bentonite sulfur plant operated at 76% utilization level. The available capacity across our plants, as we've been also mentioning earlier, it gives us headroom for future growth potential. Overall, we remain confident of continuing our growth trajectory while extending full support to our customers, suppliers, and other valued stakeholders. Industry is gradually opening with the reduction in new cases of COVID-19. As a result, demand scenario is likely to improve going forward. I think with this, we'll be happy to take your questions. Thank you.